Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about some of the medical diagnostic plays which could be big over the next 4 or 5 years. So these are my 5 best picks in this segment. So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should do that with their own due diligence and research, and not in favor or against any company that I talk about. Before I talk about these 5 plays, here's a small request that kindly support me on Patreon, and once you do that, it will help me grow the channel, help you also ask me questions and eke out answers in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and number of podcasts that I put up from time to time. Once you pay $100 upfront, then you get 1 year access straight away for paying for 10 months. And if you can't pay on Patreon, kindly join me on YouTube. I have started the YouTube membership from this month, so you can join on YouTube and avail all benefits of Patreon plus 4 exclusive live sessions for members. Now about the criteria about these 5 stocks that I have picked up. These are established brands and strong managements. They are diversified into different sectors like hospitals or diagnostic kits, etc., or medical tests, but they are market leaders in their space. Low debt, virtually no pledging, and strong institutional holding is there. Small cap, large cap, all sorts of companies are in there. There are solid ratios and numbers are pretty good. All top and bottom line numbers are extremely good for the last 4 or 5 years. How to allocate the funds? Well, if you want to buy these 5 only, then you put 20% in these 5 stocks, buy over the next 6 months on decline, and it should be growing between 25 to 30% on a yearly basis. Keep a 30% stop loss from your average buy price, or if you want to mix it with your portfolio, then you buy 10% in each and probably mix it with other 5 large cap stocks, and that will make up a very good portfolio for you. My first pick in this list is pretty obvious and most of you might be knowing about it, and it has corrected from the highs. This is Dr. Lal Path Labs, trading at around 3700 at the moment. It is the leader in Indian diagnostic market and is gaining market share across North and West India, but it is supposed to do extremely well over the next few years as it expands into more areas in India, probably going into south of India or into that part, because they are not quite prevalent in the south. So it is gaining market share every quarter, and valuations are stretched but numbers will support it, and now the stock has corrected from the top, so it looks pretty good. Great moat and longevity of business is there. Consistent growth expected going forward. I believe that post the pandemic year, the numbers might not be that great for a year, but after 3 or 4 quarters, the numbers will pick up because people are now getting more, you can say, health conscious, and they are looking for more tests sitting at home, and it is easier for them to have the tests done in that manner. The second in this list is an Eurekah, growing medical equipment player. It is a very interesting play because they make medical equipment such as, you can say, oximeters or blood pressure monitors, and they are virtually selling online, and their business really did extremely well when they sold during the pandemic over the last 18 months, and probably the sales numbers or the profit numbers may dip for 2-3 quarters, but I think the robustness of the business is such. I think going forward, this is the kind of business online that is going to perform extremely well. So in my opinion, Eurekah is going to do extremely well, and I think the business per se is going to do very well going forward. So if you look at the company per se, we look at it that it is the darling of the large investors with 10% public shareholding, and 90% of the holding is with the promoters and large institutions, and is gaining market share as products are becoming part of every home. So currently what is happening is something like an oximeter or a blood pressure monitor is being bought everywhere because people are becoming health conscious. So another play for the next 10 years could be this one. It is a small cap company which is set to do extremely well. The third in this list is Prevest Denpro. This is a very interesting and latest listing. A disclaimer that I have some position in the stock. This is a very interesting play listed in the last week of September and has surged. So their IPO price was 84, listed at 160. Currently, at the stock is around 280. It is a leading player in the dental space and the only player that got listed in this space, have grown at 40% CAGR over the last few years. On the bottom line, has grown at 20% to 25% in terms of sales growth over the last 4 or 5 years, and it is the only Indian player that has got US FDA and European approvals, and currently is exporting to more than 70-80 countries globally. Valuations are stretched at the moment, trading at around 50 times earnings, but growth is expected to accelerate as we go along further, or as we move further ahead, because the demand will only pick up post the pandemic. As I mentioned, it exports to around more than 70 countries and have got US FDA approval, but they are not exporting to US at the moment, but they are set to do that going forward. And currently, it is listed in the SME platform, and probably in 2 years' time, it will be listed in the main platform as well. So this is something that could be looked forward to. 350 crore market cap company can really do well over the next decade or so. The fourth in the list is Polymedicure, an interesting company, fast growing medical appliance company to large hospitals. They sell their products, are doing well in a competitive market. They have produced very decent numbers, and it has corrected from the top. It is not quite at the all time high, and so on and so forth. All these medical equipment, and you can say testing companies, have corrected from the top as things are opening up. So there are opening up trade going on. So in that respect, these companies look now better compared to when they were at all-time highs. Return ratios are very strong, and it is a debt-free company with strong management. Institutional investment is big, and it is gaining momentum. So the company is no longer a very small cap kind of a company. It is pretty renowned at the moment, and I think it is set to grow even further as people's habits change, and people become more, you can say, savvy with respect to medical health, and you can say getting their health in order. The fifth in the list, and one of my favorites even now, with 400 crore market cap or something like that, 350 400 crore market cap, I'm looking at Kilpest India. I've been talking about it since 2018 and early 2019, and we had the pandemic. The stock went to 770, has corrected. It is the leader in the testing kit segment of all sorts, not just the current pandemic, but they get into the testing kits of all sorts of things like chikungunya, etc. And it has gained market share in this turmoil. It has become even better with gaining more clients and market share, captured clients across the board, debt and pledge free, growing at around 35-40%. There's a chance of a listing that could take place over the next year or so for 3B Black Bio. That will be very accretive for the shareholders, and things will look only better. I think the lower end of the stock could be around 400, but the upper end over the next 4 or 5 years, I see 2000 on the stock. So this is a very good pick. So this was a video on the 5 best picks in the diagnostic sector. Please like and subscribe my channel and hit the bell icon so you can get my videos straight away when I post it, and kindly support me on YouTube or Patreon. Thanks a lot.